day, at least in the US Open, we have the Canadian employment. That's why we decided to give this live streaming for you, analyze once again the markets. So let me just, excuse me, just very quick, just quickly to check whether the all the social media workers they actually were multi-streaming YouTube and Facebook, and I'd like to make sure that everything works properly. So just let me quickly have a look. Yes, YouTube works just fine. Hold. At least I can see that it works. So for anything, let me know. Unfortunately, I cannot enter my Facebook page. So guys, anyone that is actually using Facebook, I would really like to ask you guys to switch to YouTube so I can see your questions. Unfortunately, I cannot enter Facebook page right now. It kicked me out. So for any questions, I would appreciate it if you could. I will appreciate it if you could switch to YouTube and write it below the live. So yeah. So as long as YouTube works fine, we're good to go. So we have 5 minutes until the 6 minutes until the Canadian data. Okay, so what is really expected, as we stated in this event, below in this event in the description, and in general, the prospects for today's Canadian data are actually coming to 250,000 jobs in Canada. So that is and the unemployment to slow down a bit at 7.7%. So this is what is expected. Actually, in other channels, I can see that the estimations for net change in employment is up to 195. Okay, so this is what briefly what is expected for today's outcomes. So now, guys, I will quickly do a quick briefing of what happened so far today, and I will switch to MT4. DR2TJR. Are you referring to the Canadian dollar? Which asset you're referring? Let me know, and I will switch to Canadian to MT4. So as soon as you do that, I will quickly scan, or actually trying to pass you guys what happened so far today. So what we are currently standing is that actually what we have seen so far today, it was a miss on inflation expectations from China, which was a bit significant because we have seen it contracting. So we have seen a drop on the inflation for June at 0.4% for China in monthly basis. While there was also a very disappointing economic picture from UK for May. So gross domestic product for May slipped to 0.8%, industrial production 0.8%, while it was expected to be double than that. Manufacturing production also slowed down, contracted actually to 0.1%, but it was expected to come out at 1%. So the miss both in the inflation data from China and the gross domestic product and industrial production from UK are quite serious. Okay, so that was from data perspective what we have seen so far today. So you can understand, or you might already saw that this data, starting from Chinese inflation, okay, they have caused some. They had actually caused a bit of risk aversion, even though that has been faded already. So during the Asia session, the important event was the Chinese inflation. As I said, it came weaker than expected. And this has added a bit to signs that the initial bounce in demand is easing. So that was it in regards to China, nothing else from China. But something that we have seen so far and it is expected to continue next week is the worries around Delta variant. So this is something that will continue to weigh on the markets in the upcoming week as well. So you can visit also our week ahead report. We mention all the important data and of the week. I'm referring to next week, of course, and what is expected, how their outcomes, how the forecasts, also. So I will start, I think, with pound. Since we had the data earlier, the midst of the data earlier. So okay, let me just quickly try to switch. Okay. Sorry, guys, I'm on my laptop, so it's a bit difficult over here. So I would like your patience today. Okay. I will start. Okay, I can see your questions. Perfect, perfect. I will remind to anyone that is watching us on Facebook that I'm struggling actually with Facebook. So if please, for the Facebook users, please switch to our YouTube channel and watch the live over there, because I cannot see your questions. I cannot open my Facebook page. So yeah. Okay, so I would like to start with pound because it was in a rally since this morning. So you can see 4 consecutive hourly sessions to the upside, back to the highs that we have seen yesterday, and there is momentum further to the upside, as you can see, because these candles are a bit are quite a respective. They have a what I have done again. Yeah, so as you can see, and you cannot see obviously. Pa, 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 pa. Okay. Come on. Okay, here we are. So, as I was saying, you can see that the momentum is quite strong still. It's not running out of steam. At least this is what we can see over here. So I also apply my intraday analysis. So I am using the 5 and 9 exponential moving average as in the 1 hour chart to check the momentum, to check the intraday picture. For those that they have seen our live analysis before, you know that we are using in this 1 hour chart the 5 and 9 exponential moving average, because it's a short time frame, so it needs a short time frame, moving averages with low settings. So 5 and 9, 5 is the green one, 9 is the yellow one. So as you can see, the bodies of these candles imply or suggest, if you prefer, that there is still bullish momentum. There are still bulls pushing the market higher. So despite the mist on the data today, we have seen, guys, that there might be this weakened monthly production and monthly GDP data. However, let's not forget that UK is coming out of lockdown actually in few days. Okay, so the overall economic picture of UK remains positive. So it might be a mist right now, but the overall economic picture of UK is in a much better situation than any other country. So it's doing quite good. Despite this mist, the overall and the so far data that we have seen in 2021 from UK, they still imply that there is still slow growth in UK economy. So, and as you can see, guys, this is how the investors have been, the market participants have been set so far today. So they keep pointing to the upside. Pound dollar weak, pound strong. Already breached yesterday's high area. right? So the high yesterday was at 138.40, so it's just another 7 pips away. If I put the 30-minute chart, we can see that there is still further boost to the upside. Both moving averages are pointing upwards. MACD, can you see MACD? No, I'm in front, so you cannot see it. Okay. It's very difficult to give a live analysis in the tiny laptop that I have. So yeah, here's my indicator. You can see that it extended higher. RSI at 77, and the weird thing or the good thing, depends on which side of the market you are, is that it's still pointing upwards. Can you see that? It's still pointing upwards, and it doesn't look ready to turn yet. So further bullish momentum for pound in an intraday basis. A break of yesterday's high, as you can see, guys, is pound dollar. Okay, pound dollar over here. So a break of yesterday's high could open the doors actually to 138.75 territory, or actually week's highs at 138. Let me be just precise and to drag it exactly on this reversal point, 138.95. So these are the next resistance areas on the breakout of yesterday's peak. And just out of curiosity, let me apply my Fibos as always. So yeah, so that will be a tricky one. And why not? And why is that? Because it clashes with yesterday's peak and 61.8 Fibonacci level. So we need a decisive break in order the asset to found the strength and to get back to 75 and 95 area. Okay, guys, but yeah, you can see MACD turn positive. This is the 1 hour chart and keeps pointing higher. RSI the same. Slope in the 1 hour chart is stiff. It's like very is it stiff? How can I it's like dramatic. So it's still pointing upwards. So yeah, momentum is still on. Let me check also your questions. Hi, welcome, Emma. So okay, you are referring to the yes, the very first one that was here was actually 22JR. So okay, now the data are out there. Let's see together the Canadian dollar, and let's firstly check the. Will I manage to share with you the data? Yes, I will. Yes, of course. So I think you can see it. Can you? Yes, perfect. So data out, 7.8% unemployment. That's bad. That's bad. That's definitely bad. So the unemployment rose. Okay, the unemployment is above expectations. It came below the May's reading, but it still shows some growth. Net change in employment 230.7. That's positive as well. Participation rate rose to 65.2%. So a bit of a mixed outlook over here. From the one hand, okay, hourly wages also rose to positive finally. So an overall positive economic actually overall positive labor market from Canada. So this should have positive. This should have positive drive in the Canadian dollar. So let's switch to MT4. And check 2TJR. Why you don't write your name there? Why you don't write your name? So yeah, let's check how Canadian dollar reacted, but definitely we can see some disappointment. Indeed, we can see that the fact that unemployment rose is not a good thing at all. But the rest of the data, like um, like the hourly wages, and the net employment change are providing some positive signs, some optimistic signs from the Canadian labor market. So there is recovery, guys. Okay, nonetheless, despite the disappointment that we got from the higher. Sorry, I need to stand still. Right. Here we are. So as I was saying, despite the disappointment that we got from the lower, from the higher unemployment, nonetheless there is, we can see growth, we can see recovery in the Canadian labor market, and this is what actually matters. Okay, oops, yeah, here we are. So let's go to dollar CAD. Here we are. Let's minimize a bit these indicators to check what's going on. Okay, so dip. Indeed, the Canadian dollar continues extending to the downside, continues strengthening along against the overall weaker dollar. So on the data, we'll shift to the 30 minutes chart, to be honest, guys. 30 minutes chart it is. Here it is. So on the data release, we have a leg lower. This leg brought the data to 124.68. So extending today's decline. So Canadian dollar stronger than US dollar for the time being. Let me zoom out a bit. And let's see, this is the bottom that we have seen yesterday. So it nearly recovered, actually it nearly returned more than 60% of the gains that we have seen yesterday. And if I switch back to the 1 hour chart and see this week's performance, overall performance, we can see that is back to the 38%. So okay, but what is important for me is the fact that from technical perspective, first of all, it crossed the 50-hour moving average, okay, and it remains below it for 4 hours in a row. My Bollingers from narrow, like suggesting consolidation, indecision, etc. Now they started expanding lower. Can you see that the Bollingers turn lower? So this strengthens the pressure on dollar CAD to the downside. The fast MAs are keep pointing lower. MACD is a bit neutral, very close to zero, nothing really from here, neutral. RSI is at 36 and actually it still holds a trajectory to the downside. So next support levels on the breakout of the this. Okay, let me just use my shapes as usual. I like using rectangle. I like to use rectangles. So this, other than their 38% Fibonacci level, is also okay, tiny over here. You can see that is yesterday's floor support. It was also Wednesday's resistance. So sorry, Wednesday's support, Tuesday's resistance. So it's a key support level over here. We need to see it closing at the bottom of the hour, at the top of the hour, sorry, below it, in order to imply that there is further steam to the downside, possibly to 124.45 and 124.15 to 20, because we have also the 200 exponential moving average over here. So keep an eye on these support areas. But as long as you see a closure or at least a negative, strong negative candle at the top of the hour, closing at 38.2 or below it. Yeah, for the time is a bit there is a bit of indecision. Can you see? So this is a 30 minutes chart. So small body candles jumped lower, it came back up, hasn't closed yet. We need another 18 minutes until this candle close. So let's wait and see. Over on my DR2 TJR, you can see that here is the daily chart. The asset, okay, in May up to June informed a rounding bottom, okay, a rounding bottom, which is a bullish pattern, by the way. It didn't manage to confirm it. It came back, retested again the neckline of our rounded bottom, and managed to break it just yesterday. So something to think about next week, guys. Something that you need to focus on next week. Keep an eye on whether the upwards momentum will continue above the 124.76, this neckline that we have seen on from this bottom, rounded bottom, this bullish pattern. So a move, an extension higher could actually, in the overall picture, in the medium term picture, daily picture, it will actually imply to a possible retest of 200-day moving average, 126.50. So that means nearly 150 pips higher, okay? Or even February's resistance at 127 area, 127, 127.30. So yeah, it has been in an upward trajectory since the for the whole June and July so far. Okay, so it's forming some kind of an ascending ascending triangle. So if it sustains and move above this 124.75 level, that will strengthen the positive momentum. How you see the MACD is positive, RSI up at 50. So the outlook for dollar CAD is still positive. That was on dollar CAD DR2 TJR. Hello guys, hello Abuja, Nigeria, hello, welcome. Good evening, dear Dada Prasad. I'm glad to see you again. So, I cannot really tell you, dear Royal, whether you should buy or not. I just analyze what I can see. So, daily picture remains positive. The medium-term picture is positive. And for the next week, you need to keep an eye on whether it will sustain and move above this neckline over here. Intraday, however, let's stick to the 30 minutes chart. You can see that it's like consolidating, struggling to move further to the downside. 124.95 for the time being. That was a huge tail lower. So you need to be a bit patient, to be honest, to see actually to see whether it will have actually a significant candle, because what I have seen from the 30 minutes chart so far is some dodginess. So doji, another 15 minutes until the closure. If I go down to the 15 minutes chart, this is the 15 minutes chart. Let's see what's going on. So consolidation, you see? So okay, where's my zoom? Can you see, guys, this indecision? So the data overall are still good. It's good for the Canadian dollar. Okay, it's good because even though the unemployment rose slightly, the fact that it came at 230,000 jobs should support the Canadian dollar. So it should give more boost to Canadian dollar against all the majors like US dollar, for example. So, however, from technical perspective, it is consolidating for 1, 2, 3, 4, 5 sessions in a row. This is a 15 minutes chart. We had a spike on the data, but there is nothing clear over here. So you need to be a bit patient and wait, I'm afraid. Okay, let me get back to the 1 hour chart or the 30 minutes chart. We need, so I will actually help you a bit by applying a Fibonacci in the 30 minutes chart. Let's see what this has to tell us. So it went down, it's consolidating around the 23.6 level. So guys, for the asset intraday to suggest that we will see it turning higher to go back up, we need to see it getting at least back to 125.10 area or even 125. So for the time being, it's extending lower. So it seems that the the sellers. Let me get rid of the rectangle. So it seems that for the time being, the bears are taking the control. This is a 15 minutes chart, though very short term time frame. My fast MAs are pointing lower, MACD is aggressively lower, Bollinger's expanding lower, 30 minutes chart the same, everything points lower. So as I said, the Canadian data were overall good. They're giving some optimistic signs for the Canadian economy. Hopefully, I was clear enough in order to make you understand the current situation. So dollar CAD intraday under pressure, while in the long-term picture, so daily, weekly time frame, it has been to the upside in an upwards trajectory since the end of June, since the beginning of June. And a very, very important support, it will be the 124.70, the neckline that I taught you in regards to the rounded top, that rounded bottom that we have seen on the between May and June. Good evening, Boho. Good evening. So let's move on. Gold, of course. Let's move on to gold. Let me quickly check whether there is anything else, like from news perspective, that I have missed. So guys, data out. So, by the way, next week we have the Bank of Canada. I think it was in Wednesday. So this data, and especially given the latest GDP data that we're having from Canada, that was quite strong, actually very strong, that could actually affect Bank of Canada's decision. So we might see further actually cut down of quantitative easing, of relief packages, and so on and so forth. So I cannot really see anything else from news perspective. So let's continue with our analysis. So gold, let's move on to gold, of course. Let's move on to gold. This is silver. Where is my gold? Okay, here's gold. My template quickly. Oops, wrong template. And here we are. Okay, so I knew that it was consolidating, but okay, let's start with the 1 hour chart. Gold has been a bit difficult lately. So, and why is that? This is the hourly chart, and you can see that for the whole, nearly the whole week. Actually, wrong. I would like to use, yeah, that's much better because it's in an ascending channel. So it's consolidating, but within a channel, it seems. Okay, so consolidating overall. I will start with the daily picture. So first of all, after the dramatic dip that we have seen, the whole May and June, since the mid of May up to the end of June, uh, the outlook has started turning positive to neutral, as you can see in July. So it managed to recover around 38% of the losses that we have seen the previous month. But if you closely watch the last four daily candles, okay, so 1, 2, 3, 4, you can see that is moving sideways, struggling to break the 38.2 Fibonacci level, so consolidating between 1790 to 1815 area, so bouncing within these two Fibonacci levels. So the overall, the medium term picture, the daily picture for gold is neutral, is flat. Okay, it is indeed above the 20-day moving average, but the fact that the candles are doji imply twin decision. So it's not a good timing to give us actually to take any decisions around gold, at least for the medium term, because it has flattened. It has clearly flattened MACD. Also, the 250-day moving average are flat, something that also implies to consolidation. So yeah, that is for gold. Intraday now, for those that they like trading gold intraday basis. So we have seen that it's still neutral. So if I put the double MACD over here, so you can see how doji the MACD is. Very, very close to neutral. Maybe I need to switch to 30 minutes chart. Let's switch to 30 minutes chart. Rebounding again and again above my support line, but without real rebound. So slightly up, turn down, slightly up, turn down. I'm not sure what you want me to cover over here, dear. Oops. Dear Haris, but I think you should get back to gold next week. It's Friday. The markets are nearly to the end. A lot of consolidation. There is nothing really in gold over here, at least in the intraday picture. Canadian yen get to 89 region area. Okay, thank you for letting me know. Let's see. Let's check together Canadian yen. Yen is a very volatile asset, so it might be very interesting. Thank you for bringing that up. Michael. So, yen, come on. Here it is. Start over here. That's a strong daily candle so far. Of course, it hasn't closed, but for the time being, it's quite a strong one. So that's the daily picture. Let's see the 1 hour chart actually. So let's start with the 1 hour chart. So okay, so there is, the asset seems to be in an upwards channel actually. If you cannot see my indicators, guys, please let me know, okay, so I could change the colors. I prefer linear and standard deviation channel. So yep, let's see what's going on over here. Moving to the upside. Sorry. Moving to the upside since yesterday. This is the 30 minutes chart, extended higher, turn slightly over and expanded higher. It hasn't reached 89, dear. It's at 88. You might wanted to type 88. So yes, indeed, it reached 88 and tries to sustain and move above it. MACD slowly it's improving, expanding to the upside. RSI the same. Let me check my fast stochastics as well. Stochastics, they have a bullish cross, if you can see it, bullishly crossed like 4 hours ago, and keep pointing upwards. Keep pointing upwards, ready to break the 80 level. Who knows? So, okay. Still, however, okay, it sustains a floor above 87.97. That's good. That's above the middle line of this regression channel. Let me get back to the 15 minutes chart. Long tails to the upside. So there is the positive momentum is being sustained in the short term in the CAD yen. So 5 remains above 9 exponential moving average. So yes, so the positive MACD, positive RSI, bullish cross of stochastic, expansion above 88 are actually turning the intraday picture for CAD yen into a positive one. But this is the 30 minutes chart. Just open higher, positive tail higher. Let's wait and see. So far, let me check something, guys, because so that was Wednesday's, Thursday's dip, right? So let's put the tiny Fibonacci. Has already recovered 50%. Excellent. Move above the 50, the 20 moving average. RSI keep expanding higher, sustaining an upwards trajectory. MACD turn positive, but signal line is still 0. So there is further steam to the upside according to RSI and moving averages in this 1 hour chart CAD yen. So in case that the asset, let me get back to the 30-minute chart. In case that the asset sustains this move, and more precisely, if it breaks the 88.16, which the latest tail, the latest high that we got so far today, if it breaks that, then the asset could actually extend higher and get back to Wednesday's area. So 88, so get back to 88.60 or even 88.70. That is a long way until that region though. Yeah, but slowly keeps maintaining this upwards move. In case that the asset turns down and breaks in the 30 minutes chart the 87.97, then it could do a quick pullback, a quick correction similar to what we've seen here or here or here. Quick pullback, correction down to 87.76. That's the lower line of my regression channel since yesterday. We have covered dollar CAD. Hello, Emma. Euro yen. Euro yen. Okay, let's check euro yen there. Euro yen. It should be somewhere here. Euro yen. Here we are. So, euro yen, similar performance as CAD yen. Keep an upwards trajectory, extending to the upside. And actually not similar trajectory. It is to the upside, but it's having actually some bullish. It has turned the intraday picture into bullish. So you can see that it has broken the 8th of July. So yesterday's resistance at 130 point and 130.40. It has broken it for 4 sessions in a row, and it keeps expanding higher. MACD positive, RSI positive. Also, this 30 minutes candle is quite strong, expanding higher, extending higher, Bollinger's pointing higher, fast moving average are also pointing higher. So there is a positive outlook intraday for Euro CAD, Euro yen. So what I'm talking about, Euro yen. So you can see that is keep pointing upwards. MACD, the 1 hour chart, even form a bullish cross, as you can see over here. Can you see that it turned also above zero along with the rising histogram? RSI also, if you put the trend line on, you can see that is sustaining a move to the upside since the beginning of the since yesterday. So what's the next resistance area for let me just the next resistance area for the euro yen, other than, of course, let me just, okay, this is for the long term anyway. So let's see, guys, let's see. So we had a dip. Let's move on to the back to the 30 minutes. So it has managed to recover, guys. Let me get rid of some lines so you can see it. Not this one. I want to get rid of that one. Excellent. So as you can see, has managed to turn above the 23.6 Fibonacci level from the losses that we have seen in July. So, and the next resistance area intraday for the asset is pretty much the 38.2 Fibonacci level. So 130.67, just 17 pips away. And the very next one, it could be the mid of this area. So 130.80. That's resistance for very short time frame traders, or nonetheless yesterday's peak over here, 131. So at 50% Fibonacci retracement, 131 round number key resistance area if the asset managed to move above 130.60. It could retest also 138. So keep an eye on 130.67 and 131 area. So intraday picture for euro yen positive, bullish momentum is being sustained. There is nothing that is pointing that this rally is run out of steam. It's still on. Let's check the daily picture as well. So for the daily picture now, okay, so we said intraday is positive, bullish momentum is being sustained, but now in the daily picture, so medium term picture, guys, is still in a decline, is still under pressure. You can see how massive this dip it was. It tried to rebound, it didn't manage to turn further lower. It also formed a rounding bottom, which is a bearish outlook, okay, bearish sign. So the daily frame for the daily outlook for euro yen is negative. Only a move back, back above the at least 130, 130, and more precisely 130, 180, it could turn this dip into a strong rebound and to get with the perspective to get back to 34 area, but it needs to get back to the 131 area, because this level coincides also with a move back to above 20-day moving average. For the time being, however, all the signs imply to a negative outlook. MACD is negative, RSI is below 50, the asset is below all its moving averages. We have a bearish cross, if you see over here. Oops, wrong indicator. We have a bearish cross as well here, as you can see, 20-day below the 50-day, so that adds further to the negative outlook in the daily picture for euro yen. So hopefully I replied to your questions, dear Michael. We have seen dollar cut, guys. I think you have seen it. Yes, I made a mistake initially, dear Denira. You noticed that I was saying yesterday, but it was Wednesday, not Thursday. Aussie dollar. Yes, Aussie dollar. Aussie dollar. Here we have Aussie dollar. Let me put my intraday analysis on. Excellent. So, actually, Aussie. Aussie has found support so far today, and in general the commodity related currencies, you can see that it rebounded and is up to 0.74.70 area right now. So can you see me, or I am stuck or something? I can see my screen being frozen. Eyes close. So it's my Wi-Fi, it seems. Check something. This is stuck. Okay, guys, I don't know whether you can hear me, but am I frozen? Can anyone tell me, just to quickly check my networks? I feel that something is wrong over here. No one is getting back to me, unfortunately. Okay. Okay, as I was saying, guys, know what's going on with the frozen camera. Sorry for that. Okay, let's do Aussie dollar anyway. So rise higher, but there is a lack of momentum, it seems, because MACD, this is the 1 hour chart, Aussie. RSI started slowing down, as you can see. MACD, the signal line remains below zero. And what it actually is triggering my attention is the fact that my fast moving averages over here, can you see them? They start turning on the right, on the right hand side. So this implies that this rally might run out of steam already. Let's check the 30 minutes chart. Indeed, struggling to break the 0.7476 level for 1 to 3 hours in a row. Flatten moving average in the 30 minutes chart. So yeah, over here we need to clarify. To clarify whether the asset started correcting. Because it's anyway overbought. Can you see it's outside? It was outside Bollinger's for 1, 2, 3, 4, 5 consecutive hours. So we might see correction right now, either consolidation or a small pullback on the asset because it has reached overbought levels. That was Aussie 1 hour chart. Let's zoom out a bit. And let's go to the daily chart to see what's going on over there. As you can see, extending lower, another fresh low today. Can you see that? Fresh lower low after last week's one and after June's one. So it keeps pointing to the downside. It keeps suggesting that the medium-term picture remains negative for Aussie dollar with lower lows. As you can see, lower low, lower low over here. So there is a lot of bearish momentum on the Aussie dollar with these rebounds, as you can see, looking like correction before another dip to the downside. So for the time being, the Aussie dollar remains under pressure below all moving average. The 20-day moving average crossed 200 moving averages just on Wednesday. So strengthening this bearish daily picture. Intraday, as I said, for the time being, it looks that this rally ran out of steam. So we have entered a consolidation mode for the time being. So we have covered Aussie. Let's go to Euro dollar. Euro dollar, here we are. Euro dollar was one of the movers so far today. I will zoom in to show you these big candles over here. And my camera has frozen, unfortunately. I don't know why, but I'm afraid to refresh, guys. So hopefully you can see me. Hopefully you can hear me. Oh, yes, you can. Perfect. So it's just the camera. It's just the camera. We can't see you, but we can hear you. Okay, guys, that's good. It seems that my camera has frozen. I'm afraid to refresh, because if I refresh, it might just close. The live stream might just close. So okay, it's a good thing that you can hear me at least. So yeah, we were gonna analyze euro dollar, right? Euro dollar. So euro dollar, guys, concurrently has lifted above, as you can see over here, above 150 and 160, 118.50, 118.60. Why this is important? This is important because this is a daily chart, by the way, don't confuse yourselves. It's just because I want to show you, okay, that 118.50, okay, it was a bottom that we have seen in the mid of June. So now it was converted into resistance, which has actually broken today. Was broken today, guys. It was retested yesterday as well, but the asset quickly turned back down, and today we had a nice strong bullish candle at 12 o'clock server time. closing above 50 and sustaining a move since then for 1, 2, 3, 4 hours in a session, extending to the upside above it. You can say, but Andria, the last hour is been bearish. It's been bearish, but it has posted another high, if you noticed, right? And it hasn't really get back to these lows over here or the 118.50. So for the time being, it's posting higher highs, higher lows, and sustaining a nice floor above the 118.50, which also clashes with the 200 period moving average. Okay, I would like also to add my 5 and 9 moving average to see what's going on as well. So okay, they have flattened a bit, so they might imply to consolidation for the time being. However, let me zoom out a bit. So okay, here we are. Let's go to the 30 minutes chart. You can see up, consolidation up. And what is important, guys, where you should focus on is on the fact that these candles are full body ones with no tail, no nothing, full body, closing close to the high area. So that's good. So as long as the asset doesn't really get back down and we have a candle, an actually hourly candle closing below the 118, let me just put a line on 118.60 level, or more precisely 118.54, which is the floor that we have seen the last 3 hours. If we don't see an hourly closure confirm bearish candle down on this area, then the asset remains on a bullish bias as the MACDs keep expanding higher, RSI the same. And let me just go up to the daily chart. Zoom out a bit. Actually, not the 1 hour chart, sorry, zoom out a bit. So you see, the asset right now is reversing some losses and some gains, but it's been held. What's important is the fact that it's been held. It sustains not weeks highs, actually 1, 2, 3 days high territory. So if it managed to provide another strong bullish candles to the upside, then the next resistance area to be closely watched, it will be Monday's high. Come on, I cannot draw it. Okay, at here we are. So 118.80, next immediate resistance level, and the very next one 118.94. So in the intraday, the euro dollar has been in a rally as long as we don't see an hourly candle coming back and closing down below 118.55 level. Okay, so you can see that it looks like a hummingbird started expanding to the upside. Bollingers keep parabolics keep pointing upwards. MACD, I'm not sure whether you can see MACD actually. Let me put a duplicated one. Expanding higher, RSI above 50, so remains positive. With this pullback, look like corrections for the time being. And next question. Let's see the next question, guys. Let's see. Okay. Cable. Someone is asking about cable. Good. cable. Even though we covered pound, it was the very first one, but don't worry, I will do it again. Okay, yeah, I did mention that despite the miss on the data today, the pound was in a rally, and this continues, it seems. For those that have been with me in this analysis since the beginning, we had seen actually we were right here, and it's still that it keep pointing higher and higher. So rally continues, strong spike on MACD, keep pushing higher, keep expanding higher. RSI at 76, and actually it's sustained a bullish momentum. Moving average are keep pointing higher. So yeah, intraday picture for pound dollar is positive and actually managing to break Wednesday's high. So as I said, guys, and this is a tricky level right now, because if I'm not mistaken, it was the 61. Yeah, it was the 61.8 Fibonacci level, and it still is. So it has broken it just 23 minutes ago. It has broken it. So can you see that it has broken the 61.8? It has broken it decisively. So however, it's something that it has done on Wednesday as well. So we need to be a bit patient to see, because the asset right now is overbought. So it needs a correction. Can you see that for 1, 2, 3, 4 hours in a row, fifth hour in a row, it's outside Bollinger, so it's overbought, it's overextended. So we might see correction, we might see consolidation or correction, we might see something, because this is a 61.8 Fibonacci level, so it's a strong retracement level. So yeah, we need to see a second bullish candle above, away from 61.8, in order to imply that the asset will get back to week's highs. So this is a big obstacle. So we need to keep an eye on it over here. We need to keep an eye on it. It's still in a strong rally. There is a lot of bullish momentum, but this is the 61.8 Fibonacci level. It's already overbought, so we might see correction. Even though for the time being, let's see the 30 minutes chart, trying sideways right now. So let's wait and see. So yeah, but it remains bullish. Daily picture, recovered 2 days losses, remains below the 20-day moving average. So this neutral sideways move that has been seen in the daily chart the last 2 weeks, it cannot stop as long as the asset doesn't manage to move above the 139 level. It needs to get back to above 39 level at least. That was on pound. Hello everyone. I'm selling gold, still holding. Okay, dear. Okay, I cannot really tell you what to do, but let's see gold again. Yes, it's been consolidating. I remember it was a bit lot of sideways move, a lot of indecision. Let's see whether there is like an intraday. So see the flag. What is this? It's an asymmetrical triangle. It looks like a symmetrical triangle. So okay, nothing really exciting over here, I'm afraid, dear. consolidating in a symmetrical triangle, we need to see something substantial. We need to see that a strong move higher above 1809 or a strong break lower, breaking at least 1796 level, in order to imply that there is some direction in gold intraday. For the time being, it's just consolidating within this triangle. Okay, so you said that you're selling. Let's see the daily picture. So yeah, it's struggling to move to the upside. It has flattened, but flattened doesn't necessarily mean selling. It is what it is. So it is what it is. Just a flattening, indecision. So a lot of indecision, maybe because it's the end of the week as well. People are closing positions to reposition on Monday. But yeah, only a move back to below 20-day moving average. So back to 1790. To break it and to move below it, it could open again the doors to the downside and to the this bottom over here, 1750 level. But we need to see it moving back down to at least come back below 1790 level. So if it breaks that level, it could get down here again, because momentum is still negative. So there are still a lot of sellers in the market. Okay, that's a very good question. How Fed monetary policy affect market today? Okay, so there. Oops. So as I'm not sure whether everyone knows or not, but let me just, if you as you remember, back in June, the middle of June, we have seen a very interesting shift from FOMC, a very interesting shift on their comments. Okay, so we have seen actually Fed being more talking about tapering, don't bump up as well. They also sounded more hawkish than what was expected. So they continue to like discussing about tapering. So that was something that affected the market, and this is something that has also affected the rest of the central banks. So the release of the FOMC minutes this week, as Stuart explained yesterday, it might have not really challenged the on hold for the foreseeable picture, the Fed policy. So they might haven't really affected the long-term picture for the Fed. However, how can I say that? However, they have how can I, let me just sorry, I'm running out of steam as well. I'm losing my words. So as I said, the Fed, we had FOMC minutes. Remember this week we have seen the FOMC minutes. So the FOMC, they didn't really change anything in regards to the long term for the Fed's policy. They didn't really touch the long term expectations for the Fed. However, However, the fact that they are like discussing about tapering, um, they have also outlined a timeline on quantitative easing tapering. This is something that added some concerns, added some pressure on yields, on market, on inflation and taper concerns. So this is what has affected the market. The fact that Mr. Powell and the FOMC minutes are keep stating, discussing, or talking, mentioning tapering is something that has added worries, concerns in regards to the inflation for the markets. That's why, and also the fact that we were expecting Powell to come on a more dovish slowed, but instead it came more hawkish, is something that actually has weighted on dollars. So dollars so far today, dear, if you can hear me, hopefully you can. The dollar is under pressure and it remains under pressure so far today. That's why, because of this because of these concerns, this uncertainty and around growth uncertainty, around inflation, around the quantitative easing and the yes, all these inflation worries have added pressure. That's why we have seen commodity related currencies or safe havens benefiting slightly. So, for example, the commodity related currencies like Canadian dollar, other than the employment data that we got, Canadian dollar, Australian dollar, New Zealand, they remain to the upside. Yen and Swiss as well, which are safe havens, have held quite steady against dollar. They have sustained their gains. So this was on the back of FOMC, and this has been a taking how can I say that, taking stock in brackets week for investors. So this is the result of which has been a sharp unwinding in the reflation trade. This is what we call reflation trade. So in general, you should know that the markets what is look like the case is that they have positioned or they are trying to adjust to the fact that the initial bounce in the global economy recovery or the bounce in the global economy is starting to fade it. And and we may have top as demand plateaus and capacity constraints limit the upside. So central banks right now continue to back ongoing accommodation except Fed. Okay, so so that's why today's Fed monetary policy in 2 hours' time will be on the spotlight. Okay, so today, guys, we have Fed monetary policy report. So we have Mr. Powell speaking as well, if I'm not mistaken. So this will be this is something that on the anticipation of this is what explains why we have seen a dollar moving lower. So dollar could find some support if Mr. Powell once again discuss about tapering. Okay, this is something that might support dollar, but for the time being, dollar is under a lot of pressure against all the major currencies. So if Mr. Powell today sorry let me so if Mr. Powell today like mentions about rate hikes, tapering, as I said, overall. Tapering, this is what we call it. We're gonna proceed to rate hike. So if it states today about tapering, about hike rates, then this will be a hawkish shift once again, similar to what we have seen on Wednesday. So um, so this might support dollar. Okay, so anything that has to do about quantitative tapering rate hikes, it sounds like hawkish, so supports dollar. Anything that has to do with tightening policy, keep rates low, extension of quantitative easing, is it tends to be theoretically negative for dollar. So hopefully I replied to your question, dear Vicky. We have seen CAD yen. Yes, we have discussed about CAD yen. I cannot tell you what to do. I'm afraid, dear Khaled. I cannot. It's prohibited for legal purposes. I cannot tell you what to do. So stick on what we have discussed. Stick on the fact that we can see a strong resistance level. Okay, I removed it, but yeah, strong resistance level right now because the asset is at 50% retracement level. So this is a strong retracement, a strong resistance level. If that breaks, the very next one will be the 88.35, but a break above it, a decisive break above it, could turn the attention back to 89 level. So thank you for the feedback, guys. Thank you for letting me know that you can see me, you can hear me but not see me. So okay, so we have reached to an end. Are there any other questions, guys? I can see Michael is having a question, but I'm afraid I'm afraid, dear Michael, that Hot Forex is no longer providing cryptocurrencies. So I cannot really do any analysis on cryptos, on Bitcoin or Ethereum. Unfortunately, we don't offer them anymore. So yeah, guys, if you don't have any further questions, I need to call it a date. Thank you very much for attending today's analysis. I'm really, really sorry about the technical issues, the frozen camera. Hopefully I helped you. Thank you very much for being here. Have a great day ahead. Take care. It's the end of the week. It's Friday, so people closing position because market is closing. So take care. Powell in 2 hours and the Fed monetary policy could add volatility in the market, so be careful for the next 2 hours. Thank you. Have a great day ahead and see you again next week. Thank you, guys. Bye bye.